There might never be another bear market for Bitcoin. There's a growing sentiment that Bitcoin's usual 4-year boom and bust cycle is coming to an end. And while it might sound too good to be true, it's certainly not unreasonable. Because there's many things happening with the crypto world right now that might be indicating a shift in the behavior of Bitcoin's price. So in this video I'm going to review how the behavior of Bitcoin is changing and why we might never see another bear market. I'll also at the end of the video dive into if now is a good time to stock up on some more Bitcoin or buy your first of it. Now, if you invest in crypto and have not been living under a rock, you've probably heard about the spot ETFs that got approved for a couple of months ago. I could simply say that the ETFs are great, but that's not so fun. Let me instead tell you a story about Greg and how the ETFs actually make a difference for the price of Bitcoin. Greg is your average father. He works a 9 to 5 and drives a Honda Civic. And Greg usually likes to invest, and his favorite book is The Intelligent Investor, and Greg invests $500 every month into the S&P 500 because that's what he's been taught to do. But he's recently started to hear about this new thing called Bitcoin on the news, and also how people are becoming millionaires out of nowhere. And Greg gets very interested when he hears this, and he also wants exposure to this amazing asset called Bitcoin. Now, when Greg goes on trying to buy the Bitcoin, he is met with the problem of choosing between multiple different crypto exchanges that seem pretty shady. And he is also afraid that he might lose everything because he had heard of the FTX scam. So then Greg decides to not buy Bitcoin because it is too much of a hassle. But then suddenly he reads another news article that reads Bitcoin spot ETF approved. So now Greg is able to expose his capital to Bitcoin through an ETF that he can buy using the normal exchange that he uses to buy his S&P funds with as well. So before the ETF, Greg was not able to buy Bitcoin because it was too much of a hassle. But after the Bitcoin spot ETF, Greg was finally able to expose his capital to Bitcoin. So as you probably understood by this story, the ETF makes it much easier for normal people like your grandparents to expose their capital to Bitcoin. 11 of these spot ETFs got approved, and some of the issuers are the world's biggest asset managers, including Blackrock, among others. And the combined capital of the ETF issuers are said to be $36 trillion, which is just enormous amounts of money. You could literally buy 1.5 billion Honda Civics for that amount, just to put things into perspective. But how does the ETFs actually affect the price of Bitcoin? So there are different types of ETFs, and these particular ones that got approved in the beginning of 2024 are spot ETFs, which means that they are physically backed by Bitcoin. The ETFs themselves have to buy up the Bitcoin, and then people like Greg and your grandpa is able to buy shares of that ETF, and therefore they're able to expose their capital to Bitcoin. But are even the ETFs buying Bitcoin? Like, is there any interest whatsoever? The ETFs were approved early January this year, and despite the fact that they have only been trading for a couple of months, they still have amassed enormous amounts of Bitcoin. The Blackrock ETF alone currently holds over 250,000 Bitcoin, which is over 1% of the total supply of Bitcoin. And all the 11 ETF issuers are holding a combined 850,000 Bitcoin, which is roughly 4% of the total supply. That is just crazy. And the thing with Wall Street and these investment banks that have a spot ETF is that they essentially have unlimited money, and they have now started to go after an asset that has a limit cap. Like, there's only 21 million Bitcoin and there will never be more. Like, they are competing for an asset that has a limited supply. So I believe that the inflows to these ETFs that we're seeing right now could be a starting phase for the price behavior of Bitcoin starting to change. But the ETFs are not the only thing that is affecting the price behavior of Bitcoin. Look, since the early days of Bitcoin, people have been told that it's a scam and that it's only used by criminals. Like, the overall perception of Bitcoin has not been good, but things are definitely changing. For example, we now have the CEO of Blackrock calling Bitcoin an asset that protects you.
It is an asset class that protects you.
Right. So could this be the start of Bitcoin becoming more accepted in society? Probably. So now if the perception of Bitcoin has slowly started to change from criminal scumbag money money to a financial asset that protects you, then I believe that the interest will skyrocket. Because now respected people in society are starting to advocate for Bitcoin, like Larry Fink. And this is very important for the adoption of Bitcoin. And let me tell you a story again why this is important. Meet Deborah. She's a mother of two and works as a manager at H&M. Deborah recently received $500,000 after her father's death, but she really doesn't know what to do with it. She could buy roughly 25 Honda Civics, but instead one night she was watching this interview with the CEO of Blackrock talking about this thing called Bitcoin. And this Bitcoin is supposedly a
Digitizing gold.
So then Deborah goes on and spends her $500,000 on Bitcoin because the CEO of a $10 trillion asset managing company said that it's an asset that protects you and that type of digitized gold. So before, people like Deborah would never be putting their money into Bitcoin, because before Bitcoin was only for criminals. And now that the perception of Bitcoin might be changing as well, more people will be entitled to buy Bitcoin. And this could also make more people less inclined to sell Bitcoin when things are starting to go south, because now it is not criminal scumbag money anymore. And this, my friends, will most likely attract institutions, corporations, and potentially even countries. But how is this actually important for the price of Bitcoin? So institutions have probably not even bothered to do any research on Bitcoin, because before it was only used by criminals. But now, when the overall perception might be changing, they will probably start to do the research and actually understand how great the technology is. And let's just say this, institutions and corporations, they have money. So if they start to get an interest for Bitcoin, then the demand will skyrocket. According to a survey conducted by Coinbase at the end of 2023, 33% of institutional investors increased their crypto holdings during 2023. And moreover, a significant 60% of the participants are looking to increase their Bitcoin holdings over the next 3 years. And pay attention to the fact that this survey was conducted in 2023 before the actual spot ETFs were approved. So now getting exposure to Bitcoin for institutions and corporations is much easier. So it's reasonable to speculate that the percentage of institutional investors seeking exposure to Bitcoin has likely surged even higher. So now if the statistics are right and institutions are actually getting more interested by Bitcoin, then the demand will of course go higher. And if the perception has changed as well, less people will be inclined to sell, because it is turning into a legitimate asset, which will impact the behavior of Bitcoin's price. Now, before I answer if we're going to see another bear market or not, let's look at what happened with the price of gold after the first gold-backed ETF was introduced in 2004. Bitcoin is often said to be the digital version of gold, and in my opinion, that's a very good description, because it is far too slow and expensive to be an actual real-life currency used for everyday trade. Anyways, gold has really stood the test of time, and in 2004, the first physically gold-backed ETF was introduced to the markets, just like the first Bitcoin-backed ETF was also introduced a couple of months ago. So what happened to the price of gold after the ETFs? 1 year after the gold ETF was introduced, the price of gold skyrocketed and got a more stable price trajectory after the first initial surge to the upside. And therefore, if the ETFs are going to have the similar effect on Bitcoin as they had on gold, then Bitcoin could become less volatile and more stable after seeing a first initial surge. So is this the answer to if we're ever going to see another bear market, that we're going to see a big upside and after that a stable and boring price action? Perhaps. But before we fully analyze the question and come to a rational conclusion, there's one last thing that I want to talk about. So what happens when inflation is high? Yes, milk and bread gets more expensive, but there's also another thing that happens when inflation is high. Historically, during times of inflation, funds and institutions usually seek their money to capital safe havens, like gold. So what if Bitcoin could suit inside that capital safe haven folder? And what happens if or when the monetary system fails. Governments all over the world are printing money at a rapid pace, which further inflates the value of the fiat currencies. Just in the United States alone, the state debt is increasing by $1 trillion per 100 days. So if or when people lose faith in the monetary system, they will inevitably seek other forms of asset to keep their money in, like they will be seeking other stores of value, and then they could potentially go to Bitcoin or gold. And just the thought of an event like this happening could lead to more people choosing to allocate a part of their capital to Bitcoin, just as a precautionary measure for such an occasion. I mean, Larry Fink, the CEO of Blackrock, even compares it to gold in this part right here.
But I'm a believer in it because I do believe it is an alternative source for wealth holding. I don't believe it's ever going to be a currency. I believe it's an asset class. I believe it goes up if the world is more frightened, if people have fearful of geopolitical risk, they're fearful of their own risk. It's no different than what gold represented over thousands of years. It is a asset class that protects you. And unlike gold, where we manufacture new gold, we're almost at the ceiling of the amount of Bitcoin that we created.
So given this perspective, it's not entirely unreasonable to speculate that institutions like BlackRock are hedging against potential failures in the monetary system through investments in Bitcoin. Okay, this is just all speculations and nothing is for certain, but I just think that it's very interesting. Now, will we ever see another bear market for Bitcoin? I would truly love to give you a simple yes or no answer, but it's not quite that simple. So with all the things happening right now, like the spot ETFs, the perception of Bitcoin changing, and the potential alarming thought of a failure in the monetary system, it's very reasonable to speculate that the demand for Bitcoin is not going to decline over the next couple of years. And this makes me believe that we're not going to see another bear market again, at least not in a very long time. Because when the price of Bitcoin starts to drop, then Wall Street will step in with Wall Street sentiment and thinking to buy the dip. And if the perception of Bitcoin really has started to change as well, people will just be buying more if the price is dropping, because it is supposedly an asset that protects you and is also a hedge against inflation. So I don't think it's totally unreasonable to speculate that Bitcoin is going to start behaving like the S&P 500 after the first initial surge, just like the price of gold stabilized after seeing a first initial surge after the ETF was introduced. Though it is somewhat foolish to say that Bitcoin will never see a bear market again. It really depends on how you define a bear market. Like in the bear markets of 2018 and 2022, Bitcoin depreciated over 80% in value, which was devastating for the ones who bought at the top. And that is what I call a bear market. A market where price drops significantly to the downside, and that bears are in control. Not the actual bears that live in a forest, but you get what I mean. So what I'm saying is that there's still going to be drawdowns, but I don't believe that there's going to be as severe drawdowns after the bull runs as we've seen before. And after the first initial surge in the price of Bitcoin that I've been talking about throughout this entire video, then I believe that the bull runs are not going to be as substantial as well. So with that said, Bitcoin could become very stable and straight up boring. But how will this affect the rest of the crypto world? So the crypto market usually moves with Bitcoin. If my speculations about Bitcoin going much higher in the next couple of years are true, then it will be beneficial for the whole crypto market. And more people will probably be inclined to buy other cryptos as well, because they realize that Bitcoin actually wasn't a scam. And therefore, a lot of altcoins will also see a big surge to the upside. So with that said, should you be selling your house and potentially one of your arms to buy Bitcoin? Okay, so here's the thing. Nothing is for certain, and nothing in this video is financial advice. So in the short-term picture, the price of Bitcoin can go down, but it can also go up. But it's important that you look at things with a broader perspective. Like, you can't expect to get returns within the first week. You need to have a longer time perspective, like a couple of years. But all I can say is that things are really looking bright. The perception of Bitcoin changing, the ETFs making making Bitcoin much more accessible for normal people, and also the potential alarming thought of a failure in the monetary system. So nonetheless, in my opinion, things are looking bright and the demand for Bitcoin will probably not decline in the next couple of years. Now, if you want to trade crypto yourself and exploit potential moves, then you can sign up on Bybit using my link down below, where you can trade crypto easily using spot or leverage. Bybit actually has a really great fee structure, so if you want to get into trading crypto with spot or leverage, you can use my link down below, where you also receive a sign up bonus for just signing up and trading some cryptocurrencies. And also remember to store your cryptocurrencies safely. You don't want the hacker stealing all of your cryptocurrencies, and that's why you should be having a cold storage option. Personally, I'm using the Tangem hardware wallet because I just think it's very easy to use and also very elegant. If you want to get one yourselves, you can use the code Tashi to save 10% on your purchase, or use my link down below. Now, enough about me. Please tell me your own thoughts in the comment section of this video. Like, do you think that the 4-year boom and bust cycle is over, or is it going to continue? You can tell me right now in the comment section, and while you're down there, you could as well like the video if you enjoy it. It's truly appreciated. Now, before you go and invest your hard-earned money into various different cryptocurrencies, it's truly essential that you don't lose all of it. Look, rug pulls happen often, and you certainly don't want to be losing all of your capital because you bought one wrong crypto that accidentally was a rug pull. So watch this video right here, where I'm explaining the 5 simple steps to avoid a crypto project that is potentially a rug pull, so that you don't lose all of your money when investing in cryptocurrencies. Thank you so much for watching. My name is Tashi. Goodbye.